I tweeted, you guys asked me the question, I picked the best one, and what we're going to do with it is we're going to give this guy a free one-on-one session, and we're going to answer this question as well as many of the other ones as I can get to in this video here. So we're going to start here. For those who have been trading for a while but struggle to be profitable, what would you put them on? Losses are larger than wins. Port keeps bouncing around. So there's two problems here. The first thing is, if your losses are larger than your wins, your stop's too wide. It also means you're likely not understanding how we enter trades and make winning positions. So we're going to discuss that first. And then the question of what would you put them on, we'll answer that today here. So the first thing is winning positions. What are they? Well, a winning position defined by the strat is we want to trade back through a previous range. We want signals that cause that. So what does that look like? Just in really simple terms with a line chart. It looks like this. We want to see new lows. We want to trade back through that previous range and look for new highs. So new lows, coming back above those lows, targeting new highs. This is how we make winning positions, reclaiming one side of the range to target the other. So every signal, every setup, every trade is all going to be this. Now, on a price chart, it looks something along the lines of this. You have a range. We can either get stuck inside of it or it can be previous swing highs and swing lows. We look for it to take one side out and then reverse back through that range, giving us a signal and then a target. We want to take out all of these pivots or all these previous highs. We want to take this out as we reclaim these lows. So we're going to look ideally to take this high out after coming back above these lows. That is the ideal scenario. Now, it can also look something like this. We can have a chart that has swing highs, right? And swing lows. And you can reclaim previous highs, such as here, and target those previous lows. It's going to be the same idea. You can see the same patterns playing out. You're stuck in the middle of this high and this low. You make the new highs, fail, and then you take the new lows out. And this will repeat. So we need to make sure we're trading at the lows and highs of ranges when we're trying to take long and short positions. So this is the first thing that you have to understand. The reason we do this is because a winning trade looks like price was going up. So in this case, it was going up. Then it reversed. So you not only have people who are long, but you have a new seller that's entering the market. They're either profit taking or it's a short seller, but they're selling. And you're selling through a previous range of guys who are long. So not only are the long are the shorts in here selling and hitting the bid, but anyone that was long here or against these lows, as you come through the range, these guys who are buying now have to sell as well. So you have 2 times the selling pressure is the idea. So it will speed up as you go through a previous range. So let's go and discuss a recent trade we put on, and it was a really big one, and you'll see how this is playing out. And we have the evidence of it here. So we'll discuss that after, or actually we'll discuss it before, just so we can show that this was something we tracked, traded, and played. So you guys trust me here. So you'll see hood. We say that's a sexy looking chart, the 1 day. What is it? It's a new low, reclaiming the range. Where's it going to go? There. You already know how to trade. Perfect. If you understood that. So what are we going to look for? We're going to look for it to go to the other side of that range. How do we know if it's happening? Well, as long as the day is making higher lows, we're going to take that out. So if we go to the daily chart in hood, it looks like this. You'll see we have that reclaim of this low. They make a higher low, and then a higher low, and then a higher low, and they've taken it out. And then it doesn't reverse. Higher low, higher low, higher low. It's still going. This is what we are looking to trade. We should be long here, and we should still be long because it has not reversed. So how do we then get positions here? Let's say we didn't perfectly time the lows here. We look for the same thing. So before we get to that, let's just get to the higher time frame and show you how this is very fractal. So the first thing we'll see is this year, it's a higher low this year and it's green. So is it going up? It is. It's higher highs and higher lows this year. It's going up. Where's it going? Well, you'll see we had the lower lows to this bar, and now we're back above the lows of this bar. So where's it going to go? The other side of that bar, 85. So we already know it's trying to go there on a yearly basis. We have 7 months for that to happen and 18 days. If we go to the quarterly chart, you will see if the year is going higher lows, the quarter makes a lower low, reclaims, where is it going to go? New highs to that. So anytime we're above here and we're green, we want to see this 90% move. If we go to the month, this month, you'll see lower low, they reclaim that range. This month, at minimum, we want to see this high, and then we'd be looking for that quarterly high. So then how do we get in on this? If we reclaim that low and we didn't enter it at the lows here, how do we get in? We go to the day, the reclaim of the day, the lower low, but it's a higher low on the month. The quarter's, lower lows and coming back through a range. The year is going up this year. When this goes lower low and comes back in, it's go time, right? Everything's going up. So that's how we get in as a swing trader. The same thing occurred if we look down and left. You'll see new lows, reversal, up they go for about 4 bars. 1, 2, 3, 4, then reversal. And at that point, you're still in a big winning position. If we look left, you'll see the lower lows, reclaim, up they go. This is all we're looking for. And you're going to see it's everywhere. Higher highs, reclaim, down they go. Same exact thing, right? Slight lower lows, reclaim, slight higher highs, reclaim, over and over. So let's say we frame this out and we have the daily reclaim here. How do we enter that trade? Well, let's say we go to a 15-minute. On a 15-minute basis, first place we could have bought it was right here when this went green and reclaimed that low, right? It wasn't a signal, but it was a change in continuity. It went green here. Then you'll see slight lower lows, reclaim, and then goes to new highs, right? And then reclaims that. That's when you reduce and defend your winning position. In this case, it gaps down, but we're still making higher lows. If we go to a 5-minute, you're going to see this. To make that higher low, they make a lower low, reversal. Where's this going to go? New high of day, of course. And then you're going to see as the day plays out, they have some very slight lower lows which fail. That's okay. There will be losing positions. But the goal is this big winning trade is going to pay for any losing position you may have taken. So if we continue to look through this, you'll see some slightly lower lows, some slight reclaim, then new highs. What we like to see is not slight lower lows, although we can play that. We want to see lower low, reclaim, boom, big winning trade. That's what we want to play. And then by the time you're in that, you can just hold it. And then if you miss that one right here, you will see lower lows, reclaim, big winning trade, right? And then they reclaim the highs up in here. They reverse right here. And then as it plays out, you'll see the biggest moves will be the biggest levels that get reclaimed. So when we look at a level of reclaim, we have to think of how big that range is. So if you make this low and reclaim it, the highs of that range is here. So this is the expectation of the move. And when you have all the time frames like we showed, the year, the quarter, the month, all in your favor, they tend to go a lot further. So the bigger the range is, the more likely it is to work, and the bigger your profit target is. So the next biggest problem people have is they learn this and then they trade on a 1-minute chart and you get wrecked. The best trades will occur on the 30, 60 charts with the bigger levels of reclaim. And the biggest moves come from monthly, yearly, quarterly levels of reclaim, which I'll show you. But if we go to the 60 chart on Hood, you're going to see on the whole way up, the biggest moves come from 60-minute levels of reclaim. The 60 reclaim here, which was the daily. They did gap it down and buy it, but then up they go. The 60 reclaim here, up they go, boom. The 60 reclaim here, right there, up they go, boom. Right, and then this is a slight lower low, but you'll see slight lower low reclaim here. Where are they going? Up there. And we discussed this on Monday trading. So then the question is, getting some messages, but then the question is, which time frame are you going to be? You can be a 60 guy, daily guy, weekly guy, monthly guy, quarterly guy, yearly guy. Do what works for you. If you can't sit at the charts all day, be a daily guy. We just showed you how to do it on daily. If you're a weekly guy, do it on a weekly basis. Here's a cat. This is one we alerted in the Discord. Reclaims here, 308. Where is it trading? 356 today, I think is what it hit. That's a good trade. You only need a couple shares, right? And that's a couple $100, 3 weeks. You don't have to do anything. So we want to trade big levels of reclaim, and we want to go after, you can see the really big ranges, where if we're just using levels of reclaim, you're going to see lower low and the highs here. If this reclaims here and that's successful and that works, it's going up there. Now, the more nuanced approach where it's like, how do we know if it's reversed here or not? I'm not going to discuss too much of that here, although there is a future question that might discuss it, but this is the biggest thing I'd focus on. And then it's just a matter of finding the signals, which that's why you have the strat scanner to do that. Currently, we have some data updates going through, but finding the signals, what we do is we scan for the signal, then we look and see, is it reclaiming a big range? So let's go to like VLO, for example. This inside weak signal occurs where? After new lows to here. So if this goes inside signal and that works, where's it going to go? Zoom out, right? It's going to go up here, right? And at minimum, if you zoom in, there's other levels that you can play off of right here. See this inside signal reclaims here. Where's that going to go, right? Minimum, you'd want to see stuff up in here. So the bigger the level is, the better it's going to be. The last thing I'd say is just don't trade in the middle of these ranges, right? We want to trade from the highs and lows because that's where the best trades will come from. So hopefully that answers your question and gives you something to focus on. But if your trades are not coming off new lows and new highs, you're doing it wrong. Now let's go and discuss some of these other questions here. So I'm literally just going to pick at random. So staying confident in your broadening formations when you see multiple ones on different time frames, what should we focus on? So like we've shown you, the big ones, focus on the big ones. If it's not obvious, right? If you don't see like a nice big low that you're coming back into, ignore it, right? And if you're just playing broadening formations, you're going to have obvious broadening formations in there as well. Like let's go to microchip, for example. It's like, is this obvious? Hammer month. Yep, that shows up on the scans. Do we draw this out? We do. If that works, does it reclaim this? It does, right? This is obvious. Lower lows, higher highs, lower lows, hammer, higher highs, right? This is about as obvious as it gets. AMAT. So you're going to see this is where it's less obvious, but lower lows, reclaim, where's that going to go? Potentially higher highs, right? Maybe it does, maybe it doesn't, but you've already made your money. You're 14% up. You're not going to lose if that's what you're doing. So hopefully that makes sense. You just want the biggest one you can find. And if you go to like TSM, this is one that can trip people up, right? It's like, well, here's my signal. Where's my broadening formation? Well, you didn't make lower lows to this, right? But you did make lower lows to that. So it looks like this. So it doesn't have to be off of a new swing low. It's just slightly lower lows to these guys. It's not big lower lows to these guys. Hopefully that makes sense. Now, as far as the small ones are concerned with, profit taking and whatnot, you use the small ones to defend your positions because of what we call exhaustion risk. So if we go back to Hood, this month, we already know we're buying it, right? We already talked about this. But as those broadening formations play out, every time we go into the recent highs, that's when we don't know if it's going to continue or not. It has to stay up there. So for example, in the morning, we had this lower lows, reclaim. Where's it going to go? Here. So up they go. Once it's up here, this is your smaller broadening formation. Here's your new highs. Here's your new lows. So you have the big quarterly broadening formation, the big yearly one to all-time highs, but this one's at the top. So we don't want to buy at the top of this. We want to let it come back in, come to the bottom of the range, and buy it down here. So don't buy at the top of these short-term broadening formations, or at least we're not going to suggest doing that. We want to buy back through a previous range of short traders who are going to get cremated because of our strat principles we know to be true. But hopefully that makes sense. So when you have short-term ones, it's going to be like this. It's like it goes into new lows. Perfect. Yeah, you got it. Goes into slight higher highs here, and then it comes back in. It's like, okay, here's the short-term broadening formation, right? And when they're small like this, like we said, these ones aren't going to be as relevant because the smaller it is, the less likely it is to broaden. The bigger it is, the more likely it is to broaden. So you want the bigger range. But you're going to see these short-term ones, they're everywhere. So we prefer to just go after the big ones. You have to draw them less. It's easier. The moves are bigger, and you're just going to have more fun doing it. Hopefully that answers your question. So we had one, how is the broadening formation not subjective? This is a quick answer. We talk about it all the time. But the scenario 3, so you'll see new highs, new lows. That is a broadening formation. So on a lower time frame, that might look like this. This is a broadening formation. New lows, new highs, new lows. So here it is. Boom, boom. This is what it looks like on a higher time frame. So when you look at a chart, we're always drawing it, understanding that this is a broadening formation. So if this was a 60-minute chart, a 30-minute chart would look like this. And, forgive me for the colors being weird, but the 60 could look like this. We'll just say this is a green bar for sake of example. But these two bars would be the 30-minute. These two bars would be the 30-minute. So This is an outside 60-minute to these two bars. These two bars are an outside bar to these two bars. Now, if it was multiple bars, 1, 2, 3, 4 bars, then 1, 2, 3, 4. These bars are all outside of these bars. So when we look at a broadening formation, we're saying all of these bars are outside of all of these bars, right? So this is a scenario 3, the same way this is a scenario 3. That's how we know. So we're going to skip on this because I have videos planned for the scanner. But as far as extracting the right data to disseminate strength and weakness, it's mostly how green or red is it. So like if we go to ACHR, this is bright green. This is going to be the strongest stuff. So things that are bright green, bright red, you want signals and you want those bright green bars, bright red bars back through a range. That's what we want. So if we go to like lift this month, this is what we're looking for. We still have 16 days. So when this goes inside bar, if that breaks, it should explode, just like hood today. You'll see the day was bright green. Then we had an inside bar, boom, it explodes. It rallied 4%, then rallied another 4%, right? Into all highs here. So that's what we want. We want stuff bright green, then the signal, then it explodes. That's what we're looking for. And we'll discuss more about that, in a future video. Morning routine, that's like a whole video in and of itself, but the way it works is strength, selecting tickers to trade. For the most part, I'm scanning for signals. I don't know if we've gotten the update to fix the data here. It looks like we still have the problem, but we're scanning for signals. We want to trade actionable signals. And when it comes to determining strength, it's in relationship. Strength is always in relationship. Like if you have one person in the whole world, you have the whole planet and there's one person on it. That person is neither strong nor weak because there's no comparison. Strength is only a comparative term. So you need to compare multiple things to find what's strongest. So the way we like to do that is this. So Qs, for example, you'll see Qs Monday morning went 2 down, 2 down. So, or actually 2 up, 2 down, and then 2 up. So it reversed on the third 60 of the day. Comparatively, what did the other 3 indexes do? SPY was a scenario 1. Qs is relatively strong to the SPY to start the week because SPY did not reverse, whereas QQQ did. IWM was a scenario 1. So Qs is stronger than IWM as IWM did not reverse on the third 60 of the day. Dow Jones was a scenario 2 down. Dow Jones is the weakest. And it's the only index taking the morning lows at the beginning of the week. So it's comparative via the scenario, and then disseminating strength via time frame continuity is the other way we do it. So if we compare Philip Morris on the yearly, right? Bright green, it's up how much? It's up 35%, right? It's a bright green bar. It's pretty strong this year. Let's compare that to not TEM. You say TEM, right? Bright green, it's gonna be, I'd say comparatively, relatively the same. Let's just pick something that's not really doing much. XLE. XLE is a doji on the year. Philip Morris must be stronger than XLE because XLE is not going anywhere via continuity. We could also say Philip Morris is a 2 up this year. Energies are 2 down. So we have less evidence of a buyer in energies. On the yearly basis, right? This month, they're pretty green. So you do have a buyer this month and, hint, hint, you got some levels of reclaim going on there. Definitely be watching for this inside bar next month if it, closes out. But this week it is green. So we'll see. They just reclaimed all this stuff. But that's besides the point. Hopefully that makes sense. Now, as far as, determining the strength intraday, you just do what I showed you on those indexes, and you do that on a daily, weekly, monthly, quarterly, yearly basis. So what's the strongest stuff in the market, Alex? Well, the whole market was a 2 down last month. Who was a 2 up? Who was a 3 to the upside? That's going to be stronger. Palantir. This was a 3 last month. That had to be stronger. While the whole market was red on the month, PLTR went green here. It had to be stronger because the month was green. There was a buyer in there that month. Then once it took last month's highs, it already reversed up. So while the whole market just reversed this month, PLTR reversed last month, going into new highs here at 98.17. So it has to be stronger. Netflix had to be stronger, right? Now, is it going to keep going? I can't tell you that, but I can tell you it is stronger, right? Philip Morris, that was a 3 last month. That had to be stronger. Now it's reclaiming that. So maybe it goes outside bar again, but hopefully that's making sense, right? That's another way to do it, but it's the same idea, looking at those scenarios. And then scanner, time frame. Hopefully the first part of this video showed you how time frames work. Pick your favorite, but ideally get on those 30-60s. That's probably where you want to be. So this is a really good one. How to take advantage of your emotions instead of letting them tilt your count away. So emotions, and this is like a life coach thing. So hopefully I can help you guys out, not just in trading, but emotions are like flags, and they tell you that something is wrong, right? Or they just alert you to something. It's like, if someone says something, you don't feel good about it. It's like, well, probably wasn't a good word that they said to you. Maybe don't take it as seriously as you ought to, or, there's reasons you feel bad. Now, when it comes to trading and like work, jobs, that type of thing, in trading specifically, your emotions should not be dictating what you do. The same way, if your boss berates you because you screwed up and you feel really angry, that anger should not dictate how you talk to your boss, or else you're going to get fired, right? The same way, if you take a losing trade and you get super frustrated and then start revenge trading, you're firing yourself, right? So don't let your emotions dictate what you do. Now, what should they actually dictate? Well, with the strat, we have this beautiful thing called the 3 universal truths. So whenever we look at a chart, we ask, what is the scenario? So like, let's say Philip Morris, it's a 2 up on the month and it's red. Okay, what should I be doing because of that? Well, at this point, there's no signal, so there's nothing I can do. Let's just go do it over here. So this was a 2 down in green. When this month opened, it was a 2-2 reversal. I should be long, right? Now, if my emotions are like, hey, you shouldn't take this, right? It's not a good setup. Then you revert and check the strat. That emotion that tells you like you're anxious about it or you don't trust it is the fact that you don't know what you're looking at, right? If you open a chart and you have no idea what you're looking at, you're like, I don't know what to do. I don't trust it. It's like, yeah, it's telling you something. It's trying to show you what's wrong. So the emotion of being uncertain should tell you to check the analysis. Okay, what do we have? It's a 2 up month this month. It's a 2-2 reversal, and we're going into all-time highs. As long as that's still green on the month, it's considered still good. So I'm long all month. That's what it means. Now, if we go to like a daily chart, during that month, there was a gap. But we'll see, prior to the gap, we had some weekly signals. We're not going to discuss here. But the same thing all month. So at the beginning of the month, they gap it up. They're bright green. So each day, we're an inside bar. How do I feel about it? I don't know. Maybe I'm just like, I don't know what I'm supposed to do. It's like, well, it's an inside bar. If we take one side of the range and fail, we're looking for a rev strat. If we take one side and stay out, we're looking for a 2-1-2 reversal. It takes the lows out and it goes green. That's a rev strat. Tells me what I'm looking for. I'm looking to take this out because we know new lows and then it reclaims going to new highs. And then continues. I'm scared to hold the winning position. I think it's going to come back in on me. Well, has it reversed? The day is still a higher low. It's not going down. Okay, I'm still going to hold it. So you let your emotions guide you into this process of speaking out loud what you're seeing, right? So as we go through here, it's inside bar. Okay, well, either side of that range gets my attention. If it breaks the lows, it's a reversal. And if it were to reclaim that inside bar, it's a rev strat. That's another signal for me to add on. Here's your slight lower low. Rev strat, I'm going to buy it. That's a signal. I'm scared. It went up too fast. I need to get out. Okay, what does the analysis say? It's still a higher low today. It's still green. It's still up at the highs. I'm going to hold it. I'm scared. I'm scared of the overnight session. It's nowhere near reversing, right? Good earnings. It already gapped up. They already want it this month. The next day opens. It opens green. I'm scared. I think I should get out. It's green on the day. It's not going down. 2 up. Higher lows. I'm scared. I think it's still a higher low. Still going. Higher lows. It's still going. New highs comes back in and then goes 3. Reversal. Oh my gosh, I need to get out. Perfect. Get out. It just reversed. So you can see the emotions. It's like, what are my emotions telling me? Okay, something's wrong. I need to go and check my analysis. It should always push you back to checking your analysis and speaking out loud what you're thinking. So when it comes to trading, that's the biggest thing with emotions. Don't let it make the decisions and get you fired, right? Like in the boss example. Let the emotions push you back to your analysis so you actually know what you should do based on your strategy, even if you're not a stratter. Obviously the strat's better for this since we never have to guess, right? That's the cool part. But hopefully that helps. I do plan on a longer video on that, but that is the first rendition of it. So when a trade sets up on a higher time frame, how to take the trade on a lower time frame. So we already discussed how to do this pretty much, but let's just say we're looking at signals. So Philip Morris, we had the rev strat day. When it reclaims here, we could have been going after it. Then it gaps down and goes green. We can go after the gap down buy. We can also go after the break. So with signals, we can take the break. That's why the signal exists, to take the break. And we have a target to take that out. Now, as far as entering it on a lower time frame, what we want is to look for what we already discussed. New lows, reclaim. Gap down, it's already into new lows at the open, right? That's what the gap down tells you. Goes green, I'm in. Inside bar signal, add. 15er signal right here, you see 3 5 minutes. This is the first 15 of the day. 2-2 reversal, add. Daily signal, add. 2 slight lower low, but then goes green, still in. 2 big 2-2 reversal, reduce. And now I have a winning position. Now the rest of the day, you can see it kind of grind. New highs, comes back in, reduce, right? If you want to. And then you'll see new lows. Did it make this low? It did not, but here's our slightly lower lows. Reclaim, buy more. New highs. And you'll see the shooter signal, reduce, right? So this is all we're doing, and we already discussed more than enough of this. But when it comes to entering signals, we want the lower low first. So like if we go to SPY today, we'll just find a signal from today. So in this case, we did not have a signal on the 60 basis because we were just gunning all day, but here's your hammer day signal. We prefer to take that on a reversal on like a 1 minute because we want to go back through a range, even if it's a 1 minute range. So in the morning, it opens up, slight lower low, reclaim right here, you're in. Boom, high a day, that's your target, because we know if we take the lows of this red bar out and reclaim it, it's going here. That's how we get into the daily signal. And then the rest of the day, how do you get in? Right here, lower low, boom, there's your next one. And you're off to the races, right? That's all we want to do. And you can, again, play the slight lower lows. I'm just trying to point out the obvious ones. Because if you just wait, slight lower low, I'm in, perfect, right? That's what we call letting them open. Wait for that first. Hopefully that makes sense. This one, so might be a bit too niche. You said in a video once, if a higher time frame signal is in force, price is going to the other side of the range if a higher time frame signal is in force and price is going to the other side of the range, then it must move in the direction of the most twos in all time frames. So what this means is this. So if we go back to hood, it's going up this year. So that's 1-2 up. The quarter is a 2 down in green. So it's a 2 going 3 to take this out this quarter. That confirms the year because the year is a 2 up. This is a 2 down, but green. It's also going up this quarter. The month is a 2 up. So this month confirms that the outside quarter is going to occur. We have a 2 up year, a 2 up month, a 2 down and going 3 quarter. Anytime the week is a 2 going 3 or a 2 to the upside, it's confirming the month. Anytime the day is 2 up, it's going up. It's confirming all of that. So when this goes 2 up here, you have the 2 up month, the 2 going 3 quarter, the 2 up year. All those 2s confirm each other. Then it takes this out, and this was like a 2 going 3 on the week, I forgot to mention. But then it takes this out, now it's going up. It's a reversal on the week to the upside. And then it's still going up, still going up, still going up. So when we look at this, it's 2 up day, it's a 2 up week, it's a 2 up month, it's going up. Because if it's going to go up this month, the week must be a 2 up or a 2 going 3. If it's going to go up this week, the day has to be 2 up. So all of those 2s and 2s going 3 in the same direction confirm. So we want to think of it like this. If we know broadening formations, right, we're going to go from one side of the range to the other. If we have a reversal, boom, higher lows, higher highs, that's going up now. If it doesn't reverse, it's going to take that out because we know broadening formations exist. So if we make a higher low, higher low, higher low, and then let's just say slight lower low, then green 2 going 3, still trying to go to the highs, and then higher lows going up. As long as this is going 2 or 2 going 3 in that direction, it's going here. So higher low, higher low, higher low, higher low, slight lower low, right? Could have reduced, or, we wouldn't exit the position, but you could reduce it here. Then it goes green, get more again, because it's still confirming it's trying to take this out. And then it goes higher, low, and it's still going up. So if that's the case, then if a monthly signal, let's say the month looks like this, if this monthly signal is going to play out, this daily chart needs to be making those higher lows and those higher highs in the direction of this month. Because if this is going to go from 60 to 100, it's going to have to be a 2 or 2 going 3 on the day to make it happen. That's all that means. So now let's just say this is the month. So we'll just put it here. So if this is the month, the same thing's true in the other direction. So if this is our daily broadening formation, we'll say, right? Beginning of the month. So new lows and it starts going. This is the month up into here. If it reverses the day, this month is now forming the upper wick. So when the day reverses, we don't have evidence that that monthly person or monthly buyer is still there. So if this doesn't reverse, it will change the month. And now you have this green month that goes from something like that to looking like this and comes all the way back. So this day, when it reverses, tells you these monthly guys are done buying, which is why we want all time frames confirming each other, where we look at hood, right? Green year, green quarter, green month, the week's green. Anytime the day is 2 up, all that's going up for sure, right? There's a buyer in there. And as you can see, our analysis was extremely correct. That's a 30% move. Pretty nice, right? So hopefully that makes sense. Strike price and time, weekly or monthly participant. Just buy as much time as you can and get a strike below your target. That's pretty much the best advice that I can give. I have other videos on my channel for that. Choosing options, same thing. So like hood. If this is our reclaim, we know the target, $51. If the 51 call is $10 for this week, probably not a good option trade to take. But if the 50 call is trading at $2, $1.50, and it's going to go to 51.50, it's a good trade to take because you're going to be at your break-even price when the target hits. And if it hits before Friday, you're going to be in profit for sure. So what I would suggest looking at is look at the relationship between in the moneyness, like just go ask ChatGPT. When my option contract goes in the money, what happens to my intrinsic value? And if you don't understand those words, type it in the ChatGPT and then tell ChatGPT to explain it to you. Because if you understand your intrinsic value is above the price you bought it, you're always in a profit, then everything else falls into place. I have videos on that. Just search around my channel about options. I think it's like how I choose options contracts or something. Best time frame for scalping doesn't exist, right? It's just, we already discussed at the beginning of the video how to use reclaims. Do whatever time frame suits you. You can use a 15-second chart. You can use a 60 chart. All works the same. Rev strat combo and actionable entries. I have so many videos. Please just go look at my channel. How to trade the strat in one video, or learn the strat in one video. Go watch that. Explains all that stuff in depth, and you can just go in the description or in the comments below, and it has links to all the stuff. It's beautiful. How to know when reclaiming a range if it's just a TTO. What to pay attention to. For example, what makes it higher chances of TTO or reclaim? Perfect. So, time frame continuity. On a gapper specifically, since there's news, the 60 and day continuity is what we watch. The rest of them, we don't say that they don't matter, but they're less important to us. Because news changes what everyone thinks. Doesn't matter what participant you are. You could be a decade participant. News comes out and you want to get out, right? The same day, the day trader guys, the news comes out and the day trader guys want to do something different because of the news. So it doesn't matter with the gappers. For example, J&J, right? It opens, it goes red, it's a gap down. If it's red, we're shorting it today. There's no ifs, ands, or buts. That's just how it is. Now, what makes it higher probability to TTO or to be a successful reversal? They're both the same thing. So if we go to J&J, when this reverses at low a day, it is simultaneously a triangle layout and a reversal because there's no difference. People say, well, this is a fake move and it's like a $40 move. And it's like, wasn't that fake? I bought it and made $30 per share, right? It's like, there's no difference. What matters is how much evidence you have. So J&J, in this case, it went into, if we look down and left, the daily pivot target, which doesn't look like it's a swing low in here, but if we go to the day, you see daily pivot target here. So we know that's our first target of the day. We took this out and then we're going to take this out. And then maybe this and this later in the week, but regardless. So during the day, once it hits that, that's what we call exhaustion risk. We're recent lows on the 60 and then new lows to that. So it should triangle they out, right? And then we want to see it go in the other direction. But does that mean this is not a real reversal? No. What tells you if it's more likely to happen or not is, are you close to changing continuity? So J&J is bright red on the day. Is this 2260 likely to take the morning highs out? Not really, right? It's nowhere near doing that. At that point, the whole market was going up. So maybe it did, right? You had evidence the market was going up. So maybe that worked, but you're nowhere near doing that. It's just not a buy. It's going down today. So it depends on continuity versus if we go to hood. In this example, right? The same thing. So this was the weekly open and the daily open. When this goes reversal, is that a triangle they out or a reversal? It's both, right? They're the same thing. So the biggest thing we want to know is what is our continuity on the big time frames? Because when this reclaims this, although the week was red, it was a 2-up week. It was a 2-up day. It was a 2-up month hammer, a 2 going 3/4, and a 2-up in green year. All those time frames are green. So we had more evidence that this lower low reclaim should work because at that point, the month was green. You'll see the opens here. The quarter's green, the year's green, and the 60 is green. So based on evidence, we either have more evidence or less evidence for the reclaim to work. So like, for example, SPY. You'll see when we reclaimed the previous week lows, how much evidence do we have? Well, when that occurred, the month open was still red. So we just had the week, the day, and 60 for evidence. But since the week lasts 5 days, you have 5 days if that's green to do it. So is that likely to lower low reclaim and do that? It is, because you have a whole week for that to play out. So as long as the day is a 2 to the upside, this should happen, right? Now, because the month was red, does that mean that this shouldn't work? No, it has to do with how much evidence you have. So the same thing here, when this gap down and went green on the week, although the month is red, right? When the week went green, you had all week to go after this, and you'll see they close it out just off the highs. So it rallies 9%, right? And it closes 2% off the highs, or 2.5% off the highs. So based on the time frame continuity, it tells you which direction you want to play. So do you think, right, if this week is reclaiming this above this low and it's reclaiming this and it's reclaiming the previous week lows, do you think it's more likely that week that all the reclaims within this candle are going to be likely to work to the upside? More than likely, right? It's trying to go up this week. So when we go to like a 15 or 60 minute basis, we'll just do a 60. The reclaims that are likely to go into the new highs or new lows are going to be to the upside if we're above this weekly open here. This was Monday. So gap down goes green on Monday, boom, reclaim, you get a nice trade. Right, then stuck in the middle. We don't trade this. Hint, hint, right? We're not going to touch this. New highs, reversal. At that point, you just had the day and the 60 and the month, right? So you had some evidence for that to work. And then 2, 2, 2, 2, 2, 2, 2, reversal. Did that reclaim anything? Yeah, right? It's reclaiming this. It's reclaiming all these lows. So this reclaims. Then the day opens on Wednesday. You'll see here, the day goes green. The week is already green, and then the 60 goes signal. So when this occurs, it reclaims that. And the week's green. So this week, we have more evidence of a buyer. Boom, it goes to the new highs. So you can see the sellers did try to change that. But when this reclaim occurs above this, it's more likely to work because you have the week this week. You have the day today. You have the 60 right now, all aligning. Right, and then you'll see if we look up and left. Reclaims here. Right? Is this still a reversal? Can you still trade it? Yeah. Right. TTO and reversal. It's the same thing. Reversal. Did this stop people out? Did this triangle people out? It did. Sorry. 1 sec. Tickle my throat. But so you'll see it's like new highs. Did it reclaim? It did. Right. Reclaim this stuff. And it sells for 3 hours. Right. Can you still make a lot of money on a $20 move? You can. Right. And then it firms up here. The week's still green. Right. And the day at this point was an inside day. So this is still green on the week. It goes green on the 60s. The buyer this week's more aggressive. Now, in this case, this closes out Friday, and then they're stuck in the middle of this. But then you'll see down in here. So when this reclaims, is this a triangle layout? It is. Is it a reversal? Yes. Right. But it reclaims and then it changes. You'll see this week here goes green and now it's going to the other side of the range. So what matters is, are you playing the reclaims through the range? Because if you play the most recent one, even if you're wrong, you're still going to make money. It's just a matter of when you're really right and it doesn't reverse, stick around. Right. So like if we play this reclaim of this, when this takes off, if you start taking profit here, you're not doing it right. Let it run, right? 2, 2, 2, 2. End of the day, close. And then reversal. 2, 2, 2. Goes green and starts firming up, close it out or reduce it, right? And then it reverses, definitely want to be out. But you can still make some money on that. So I don't want you to focus more on differentiating those. But when it comes down to it, you want to look at those big time frames and they'll tell you which direction you should be trading in. So like this month on SPY. Do you think if SPY is green this month, we would prefer to take the triangle out back to the upside? Duh. Yeah, right. So let's go to the 60. This month is green. What's the first way in? Triangle out. Right here on FOMC, up they go. Right? And then you'll see slight higher lows. So there's like slight triangle out in here and then up they go. And then you'll see in here, slightly triangle they out, up they go. Slightly triangle they out, up they go. These are all lower time frame stuff. So you're like a 15. See it more clearly here. Lower low, boom. Slight lower low, boom. New highs, then we don't know. Reclaim, they take them in a little bit. And then you'll see they just chop them sideways prior to the China news. Now, if your question is, and this is the last thing I'll cover here. If your question is, well, Alex, when it reclaims this, how do I know I can still hold that? If you're in a winning position, you don't have to get out. So if you're like, hey, Alex, the month is green. This week, we're trading up. When we look at the monthly signals, we have 300 stocks taking last month's highs and we have only 5 stocks taking last month's lows. Should I be long that? It's like, yeah, well, most things are taking last month's highs this month. So we prefer, we want to be long. It's like, okay, how do I do that? Well, right here, lower lows, I get in, I make some money, then I reduce it. So if I make from here to here, let's just say hypothetically, you make $1,000. If I reduce it by half, I guarantee 500 in profit. So if I if I reduce it by half at the highs when it reclaims, my true break-even price is now here because I took $500 of profit. If it comes all the way back to where I got in, I have $500 of profit where I don't have to get out. I already got a winning trade. So if I want to be long this month because more things are taking last month's highs and there's nothing taking last month's lows. And hey, Alex posted a video and he said, hey, the whole market's going to reverse. And he did that before the month even opened. How do you know? This is how you do it. Create a winning position, get your stop, where you're not going to lose money, which would be here if you reduced it by half. And then if it does reclaim, that's when you reduce it. If it doesn't, good, just hold the whole thing. And then as it plays out, you already have this trade. Reclaim here, buy more. You can take, a couple bucks of risk on that if you really wanted to. Reclaim here, buy more. Boom, to the highs. And you can reduce it before PPI. Whatever you want, right? It's just, do you have evidence that's going in your favor? Are you in a winning trade? If you're in a winning trade, don't get out. And that's it. And I think that covers most of the questions here. So hopefully you guys enjoyed the video. This is something new I didn't really plan on doing, but I had some time since the scanner was down. But that being said, if you guys enjoyed, let me know in the comments below and I'll do more like this. And for the person that won, I think it was Ryan L., I'm going to send him a direct message and get him that one-on-one. So adios and have a good rest of your night.